Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. It is the last one for the week. It is July 6th, Thursday. We are going to take a look at NextEra Energy today. This is a utility company out of the utility sector. Let's jump right in and take a look. If you want to know more about them, check them out, www.nexteraenergy.com. That is www.nexteraenergy.com. That is their homepage where I pulled this information from. We have covered this one on this channel before, but with a bit of a pullback today, it's worth taking a look at again, and it's also one I would love to add back into my portfolio. So NextEra Energy is the world's largest utility company, and we're proud to be built and based in America. As you can see here, they are heavily located in the United States. All their different locations, facilities where they produce energy. They have a big hand in wind and solar. Some of the key factors here: planned investments in America, infrastructure through 2025, 85 to 95 billion. Number one in electric gas utilities industry on Fortune's 2023 World's Most Admired Companies list. 98% reduction in our dependency on foreign oil since 2001. That is very impressive right there, actually. Thousands of high-paying American jobs created through our investments, 67 gigawatts of power in operation, and shareholder return over the last 15 years, 480%. So if you were an investor over the last 15 years, you have done very, very well in this company. Hopefully, the next 15 years treats everyone just as well. And again, just a utility provider, big hand in renewable energy, wind and solar, primarily the United States. Looks like they have a little bit of a footprint in Canada, but overall, it's throughout the U.S., including Hawaii out here. Big presence on the East Coast, as you can see. Let's jump over and take a look at why we're looking at them today. They were down 2.58%. We are talking about NextEra Energy, ticker NEE. This is an energy company out of the utility sector. Closed out the day at $73.02. 52-week range as low as $69.64, as high as $91.35. And if you haven't checked out my stocks to buy for July video, this is one that I included because I was hoping it would do exactly this, kind of pull back closer to this 52-week low and present some buying opportunities throughout the month. I'd like to again add this into my portfolio. I am looking to add something in the utility sector, and hopefully it stays right down here in this 73 or lower, even though it looks like after hours they may have popped back up, but still in the 73 range. Average volume 7.1 billion. Today's was 4.98, and it was pretty much a sell-off right early in the morning, and then a bit of a recovery midday, and then more of a sell-off throughout the end of the day. Market cap 147.75 billion, a beta of 0.46, so they are less volatile than the overall market. Price to earning ratio $21.48 per share, a little elevated here, though they are doing a ton of investments into, again, renewable energy there. The wind and solar farms that they're putting out is capital intensive. So long as they are doing that, those have a long horizon for return on invested capital there. So think over, again, the next 10, 15, 20, 25 years, you start to see a return on those investments that they're making today. So not as concerned with a higher PE on this one based on the information that I know on the company. Earnings per share, EPS, is $3.40 per share. That's very nice, especially for a utility company. July 20th through the 24th will be their next earnings dates. And forward dividend is $1.87. They are a quarterly payer. We will see that here in a little bit, what that breaks down to per quarter. And they have a decent dividend yield, 2.52%, beats the overall market, a little on the low side for what I typically like. I like in the 3s to 4s, but again, this one, a long time horizon here, looking out into the future. If it's growing, which we'll see here in a little bit, the dividend over time, then this one could be a good one to jump in. And again, if you could get it $73 or lower back into the high 60s, somewhere in there, it would obviously increase this yield. Ex-dividend date was May 26th. They paid out on June 15th, so they should have another one coming up. You would be in line for the next dividend if you were to buy them now. And the one-year target estimate, at least according to Yahoo Finance, where I pulled this information from, I am not affiliated, just one of the sources that I go to. They have a $92.75 outlook on this one, so speaks to some upside appreciation for the stock price. Let's jump over to dividend yield theory. Statistics, under statistics tab, if you were to go down to dividend and splits, you'd find that 5-year dividend average 2.11. We want to compare it to their current 2.52, or what they call forward annual dividend yield. They're the same, 2.52. So this number being higher than their 5-year average speaks to some undervaluation on this one. So according to dividend yield theory, this one is slightly undervalued currently. And as we said, their ex-dividend date was May 26th, payout was June 15th, so you would be in line for the next dividend. They have a low payout ratio here, 51.71% for a utility company. Very nice to see. A lot of times utility companies are on the high side for their payout ratio, so this gives them a lot of runway to keep investing back into those renewable resources that we talked about, energy resources we talked about, helps them increase their dividend payout over time, buy back shares if that's something that they're interested in, pay down debt. Very capital intensive business, utility companies in general. They've got a lot of upkeep, so low payout ratio here is nice to see. Let's jump over. If you looked under financials, you'd find a lot of information, income statement, balance sheet, revenue, all that sort of information. What we're going to look at is free cash flow. You want growing free cash flow over time, and this one, I'll be honest with you, does not look good. But again, very capital intensive. A lot of the investments that they are making, they are using that money to invest back into the business. So I'm not as concerned with these numbers, but let's look at them. 2019, negative 2.9 billion. 2020, 224 million in the positive there. Big jump up there. Back in the negative in 2021, negative 277 million. Really negative in 2022, negative 1.4 billion. And haven't really reported anything. We'll have to watch in July 20th through the 24th to see what they're looking like this year. Overall, the numbers do not look good, but I would not be as concerned with this one because of the nature of the business that they are in. Let's continue on here. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. That way you can make sure the information you are getting is accurate. So those are the two sources I like. There's a lot of other sources out there. I know some people like Seeking Alpha. That's a good one. Some people like Google's site to go through. That's a good one. So there's a lot of other good sources out there. These are just two that I like, but just make sure that you're looking at more than one source of information so that you can back check the information you are getting is accurate and up to date. Sometimes they update on different cadences here, but according to the 13 stock analysts that have taken a look at this, they call it a consensus buy. They have a low estimate of $80. It's currently sitting lower than their lowest estimate. So if it comes back up to that $80 low estimate, that would be a 9.56% increase in the stock price. They have an average estimate of $92.46 per share. That would be a 26.62% increase in the stock price, and they have a high estimate of $110, which would be a 50.64% increase. And if you were to buy them now, you'd be able to collect that 2.5% dividend yield along the way as you waited for it to hit either this average or the high or even the low estimate. Like I said, they are currently lower than the lowest estimate. Now, same thing, a lot of the same information, financials, you'll find their balance sheet, income statement, just showing it to you in a little different way. Under statistics, I like to look at return on invested capital and return on equity. That's what we're looking at over here. Forecast is what we just went over. So let's jump over to return on equity. I like 10% or better. They are currently at 17%. Very nice to see there. Return on invested capital is a little lower than I like. I like 10% there as well, 5.2. Not as concerned here with this one because, again, of the nature of their reinvestments, and a lot of these return on invested capital are long-term returns, right? You're not going to get immediate returns on building out a solar field or a wind generation field. That's going to be a 10, 15, 20-year return on investment, right? So not as concerned with this one, but return on equity, very nice. We can forgive them for their low return on invested capital here, though it's not low compared to their industry average, right? So let's continue on and see what they're doing with their dividend. We want growing dividends over time. Again, 55.49% payout ratio. This is a little different than what we saw from Yahoo Finance, but pretty close. So in the 50s, which is very nice to see. Low payout ratio gives them a lot of room to expand that dividend over time, which is nice, especially for a utility company. Usually they are in the 70, 80, 90% payout ratios, elevated. But they do also pair that with a very nice dividend growth. So quarterly payer, they are on the February, June, August, November timeframe. They've been raising their dividend for quite a while. I went back to 2020, 35 cents back in 2020. They jumped it up to 38 cents and a fraction of a penny in 2021. 2022 jumped it up to 42 cents, and then in 2023 jumped it up to 46 cents and some fractions of a penny. So 10.19% dividend growth with a 2.5% dividend yield. Very nice here. Overall, all the numbers look pretty good. I am interested in this one. I probably will be starting a position next week in this one if it stays down in the $73 range, maybe even still this week. We do have Friday yet left in the trading week, even though I have made a lot of my purchases already. Tune back in for that video on Sunday for my portfolio update. You will see that. And this is the vested interest stock screener. If you are interested, go ahead and pause it here and take a look at this. This is how I look at a company to see if I'm interested in investing in it. And it is also how we run through these videos. So it speaks to how I just look at companies overall to see if they're one, I want to add them to my portfolio, and if they are currently in my portfolio, whether I want to increase my ownership of them. Well, that is it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors here so we can share our experiences, share stocks like this, share stocks we're avoiding, mistakes we've made in the past, things we've done well in the past. All that so we can share with each other in the comment section down below. That's what this channel is all about. And hit that notification bell so you're notified whenever we put out any new content. Don't want you to miss any of the videos. All of that, hitting the thumbs up, this sharing the videos, subscribing, and the notification bell, that all helps out with a small YouTube channel like me with the YouTube algorithm to get the word out. So really appreciate you doing that. And drop a comment down below. Let me know what you think of NextEra Energy. Do you have other companies in the utility sector that you like better right now? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investment involves risk and gains money. Should never invest any amount not comfortable losing. Always do your own research, investigate your situation, circumstances on select criteria, or seek the advice counsel of a certified financial advisor.